Because if there was no taxation, then why would the private sector
even want the dollars?
Even want the dollars? They could come up with their own. They could use Bitcoin or whatever.
Okay, let's dip into. I know we've maybe a little 20 minutes or so if you guys have it. So sectoral balances, which really sounds like something medieval that you'd use to balance your humors, but this is from Britain's Wynne Godley. Concept of sectoral balances. Okay, this I'm still working on, so forgive me, but or explain it, like I'm 3 years old. The accounting truth that when the government runs a deficit, the non-government sector must run a surplus and vice versa, which I think is really, really key, not just to this first conversation, but to the value you guys see in MMT as a whole. Like, wouldn't you want the government to have less and the free market and the private sector to have more? And when you have a deficit, this seems to be praxeological in the MMT framework, the non-governmental sector is going to have a surplus, that these two things are inverse, if that makes sense. So can you just break that out for me a little more?
Yeah. So if we, the simple version is we look at an economy with balanced trade, where if the government spends money into existence without taxing a corresponding amount of money, where does that money go? It ends up in a private sector bank account, either in some corporation or some individual's bank account. So the government spends $1,000 on a Social Security check. The government books $1,000 deficit, and the recipient of that security check books $1,000 profit. Does that make sense so far?
Yep, I'm with you.
Surplus might be a better word.
Surplus, yeah.
Yeah.
Now, the third sector is the foreign sector. So in this sectoral balance equation, we're looking at the issuer of the currency, the user of the currency, and the issuers or users of a different currency. So the latter is the so-called foreign sector, where if somebody from Canada purchases beef from the US, let's say $1,000, then the Canadian individual goes to their foreign exchange or bank, purchases US dollars. The foreign exchange basically takes those Canadian dollars, at the end of the day takes it to the US Fed and receives $1,000 US, hands it to the buyer, and then that person can purchase the beef from the US with $1,000. So now there's $1,000 that's come into the US economy, and the Canadian sector is short $1,000. So the foreign sector's deficit is the private sector's surplus, just as the public sector's deficit is the private sector's surplus in any countries, in any economy, basically, in any fiat money economy.
Okay. Good.
And if you map these out, these sectoral balance charts, you will see that the private sector surplus is always the inverse of the public sector's deficit plus the foreign sector's deficit.
Okay, good. I want to get now. There's another thing that blows my mind a little bit about MMT, right? So conventional economics would say if the government is running a huge budget deficit or the budget deficit is going up, interest rates are going to crank up, right? Because they're competing for resources and there's a great demand for resources and therefore interest rates are going to go up. But MMT says, no, not really the case. If you understand these sectoral imbalances, if the government spends more, where does the money end up? The money ends up in the private sector. Private sector gets this government money based on deficits, puts in the banking system. So now you have more money in the banking system, but no massive or concomitant increase in demand for it. So interest rates will tend to fall, not rise. Now, the exception being if the government soaks up reserves by selling bonds, but doesn't have to do I think MMT is like, exactly. Screw bonds, man. To hell with it, screw interest rates on reserves and all of that. And so they're saying, look, if the government runs a deficit, it ends up in the banking system, there's more money to lend, there's not a huge amount of increase in demand, so there's more supply of money, less demand for it, so interest rates are going to fall. And again, this is like Alice in Wonderland stuff for mainstream econ, but I can certainly see the case. Is that a fair way to put it?
What you described is exactly the process of how excess reserves are injected into the system, into the banking system. And you're right, if the government didn't choose to sell bonds to the banking system, then the interest rate would always be at zero. The interest rate that's paid on bonds is always a policy decision and nothing but a policy decision. The thing is, that's so for short-term rates, that's literally the case. The Fed decrees, this is how much you make on your short-term bank deposits. And the 3-month, 6-month, 1-year, 10-year, 30-year bond rates are basically just a reflection of the investors' expectations of the Federal Reserve's short-term rate over that same period. So basically, if I buy a 30-year bond right now, it pays something like 2.26% right now. I'm betting that the average of all the short-term decreed 1-month rates within that same 30-year period will be somewhere below the 2.26%. So short-term bond rates are literally determined by the Federal Reserve. Long-term bond rates are determined by the investors' expectations of what's called the dot plot chart of where the Fed is going to raise or lower rates at any given point in the future. If the Fed declared today that we're done with this whole interest rate thing, we're going to leave them at zero forever, then all these rates would come down to zero.
Right. And so again, this is it's a wild scenario. And what I do is I sort of imagine a pure free market environment for money and how would things work. And again, we're talking government and all of that. So just so everyone understands, there's no need for taxes in an MMT environment. There's no need for selling treasury securities. There's no need for taxes because the central bank, under the control of the treasury, can pay for everything by coming up with electronic money. Now, of course, a lot of people in the MMT...
There is a need for taxes.
There's a need for some taxes because otherwise there would be no drain on that money. The money would have no value.
Well,
so that's the one purpose.
No, because if you only created the money that correlated to an increase in economic output, then... But there will be times where you need to have both levers, money creation and money destruction, so to speak, and taxation would be a form of money destruction. And you need offsets to keep inflation under control. And I think the argument is that the taxes under MMT drain just enough money from consumers and businesses so that the total economic spending isn't over the top.
But there is another reason for taxation is literally so the money that people so that people have a demand for that money to begin with. Because if there was no taxation, then why would the private sector
even want the dollars?
Even want the dollars? They could come up with their own. They could use Bitcoin or whatever.
Oh, hang on. Wait, sorry. I just went onto my Bitcoin happy land. All right. Another point, I do have some issues with this. So MMT says that inflation isn't just the result of massive growth. They say that, or a lot of them say, it's businesses' excessive pricing power. So the work to break up monopolies, stop banks from making too many loans and so on. And here's a quote 3 MMTers wrote in a letter to the Financial Times recently. They said, the more actively we regulate big business for public purpose, the tighter the full employment we can achieve. So this sounds like old lefty monopoly baiting and so on, that it's price gouging, all this kind of stuff. So excessive pricing power, is this capital relative to employees? Do you know what they're talking about here?
Yeah, so there is a whole theory that Minsky has written a lot about, what's called market power, which is how does a business, why does a business make decisions? But what he's saying is a business wants to they always want to raise their prices by as much as they can because that increases inflows of money. And obviously there are ways to do that through legislative means, by lobbying, etc. There are ways to do that by being very persuasive in marketing and by having a universal marketing strategy across the whole country and all these things. Anything that a business can do privately or publicly or through lobbying that enhances their ability to set prices and to raise prices is what that means basically. Pricing power. What did you ask? Market power.
Yes. So they say that. Sorry, let me just get the right. Excessive pricing power. So they say much of inflation is based upon businesses' excessive pricing power. This is a quote. So before trying to choke off growth to kill inflation, they would try to break up monopolies and stop banks from making too many loans. And the quote is, the more actively we regulate big business for the public purpose, the tighter the full employment we can achieve. So there is a certain amount, again, corporations, and we're not in a free market system at all, not just because of money in the Fed, but because of corporatism as a whole, which would never fly in a free market society. But this idea that there would need to be some monopoly attacks and stop businesses from banks from making too many loans and so on, that some of the inflation is driven by, greed, which, everyone's greedy. And I don't know that blaming a particular financial situation on greed is like blaming an airplane crash on gravity. Like, okay, it's involved, but it's always involved, right?
Right. Well, and then can I add this about I wanted to get into the banking system today. I guess we didn't have time, and I don't think you got into it while I was gone. But I think it's important to point out.
No, I'm just kidding. Go on.
I think it's important to point out it's really not accurate to call it the private banking system. I mean, yeah, it's a business. It's able to get profit and stuff, but the bank's ability to do what it does is a special license granted to it. The bank has the ability to create money by permission from the government. So they should really be viewed as like a public-private partnership that has the permission to create money from the central money creating authority. And so when we're talking about, well, maybe banks should be more regulated or maybe banks should be less regulated, if we jump immediately into free market talk and say, whoa, the more regulations are bad, well, a bank is a regulation. It's kind of like saying, well, we should have the military do this. And someone goes, well, no, well, more regulations are bad. Well, it's like, well, yeah, but the military, all it is a regulation. Right. Like there's no other way to address it. So, and in particular, because in the banking system, and I think we mentioned this briefly in the last call, the banking system creates the majority of the money in the system, in the economic system. And I think it's something like 90% of the money, if I remember correctly. The reason that we focus so much on what the government creates is that with the banking system, whatever's generated has an equal debt. So if I get $100,000 loan, I have $100,000 debt, and the bank has, or $100,000 liability, and the bank has $100,000 asset. If you net the whole thing together, it's $0. However, if the government gives me $100,000, there's just $100,000 asset, and there is no liability because the government doesn't need it back for anything.
Yeah, I mean, the argument being that the liability is either debt or inflation that's spread out.
Yeah, well,
slippery slope.
I guess it's a slippery slope.
Or taxation, which is more direct. But sorry, go ahead.
Well, and I mean it's kind of it's not as direct as what I'm talking about right now. We're literally on the paper. Okay, there's $100,000 asset here. There's $100,000 deficit here from this loan put together.
You can't double entry bookkeep inflation. It's a bit hazy, right?
What do you mean?
Well, I mean, so if you've got $100,000 liability because you borrowed money from the bank and the bank has a $100,000 asset, then they balance out. You can put them on a sheet and so on. But if it turns out that the bank got that money from a counterfeiter and then they have to kind of spread it all out among all of their depositors and shareholders to try and get the money back, that's a bit more fuzzy. So it's just not going to go up the same way. But I think MMT would have it be a bit more double entry booking, or like assets and liabilities would cancel out.
I think it's important to point out that the bank didn't have that money when they lent it to you. They created it out of nothing.
Right.
And that's the way that the system is set up, whether we like it or not. And when we're talking about, okay, there's these MMTers that say we need to curtail the amount of bank loans that are going out. And, this immediately sets off our free market sensibilities, like, oh my God, we're introducing regulations. I think it's important to keep in mind that the bank creating the money that authority comes from the same source as the federal government creating money. The only difference is when the bank creates money, there's a liability. The asset equals the liability versus with the government, it's just out there. Now, talk of inflation and stuff aside, there's no direct debt on me personally that you need to pay this $100,000 back or we're taking your house or whatever.
Right.
And so when the banking system runs amok and says, okay, let's start putting all these loans out, there's specific guarantees attached to those specific loans. And so I think what the MMTers there are trying to say is if we could get that power drawn back a little bit and push it more toward the government where the money's just simply out there, that's actually more beneficial for the general private sector, because it's not putting all the power in the hands of a couple banking oligarchs.
If deficits are larger, there's the private sector is less dependent on bank loans.
Right.
I think that
right.
That's
now, there is a little bit of magic thinking, and we can sort of close up on this part. I'm going to keep this under 2 hours. Fascinating though it is for me, I could go all day. But there's a little bit of magical thinking here, and probably it's because you guys are more familiar with the space than I am. But here's a quote from an article. MMT's critics argue that trying to use fiscal policy to steer the economy is a proven failure because Congress and the president rarely act quickly enough to respond to a downturn. And they say politicians can't be relied upon to impose pain on the public through higher taxes or lower spending to squelch rising inflation. MMTers respond that they also oppose fine-tuning and instead want to use automatic stabilizers, including the jobs guarantee, to keep the economy on track. So that phrase, automatic stabilizers, it seems akin to magic. And I don't know if there's better answers or if that answer is a shorthand for something that's less magical. But if you could respond to that, I'd appreciate it.
Well, yeah, because you recognized earlier how the transition job program would function. That's all it is. The automatic stabilizer in the context of an MMT who supports a job guarantee program or transition job program, as it's more accurately called. That's the automatic stabilizer. If somebody becomes unemployed in the private sector, they can always get a government job in the transition job program. And no programs need to be passed, no bills need to be passed. It's just a program that's there and it functions and it stabilizes the economy lastingly. That's the idea behind the automatic stabilizer. I mean, nowadays we also have things like unemployment, unemployment. That's an automatic stabilizer, actually. Not necessarily that I agree with it or whatever, but that's what they're talking about when they say automatic stabilizers. The things that kick in when people lose their jobs or other things happen.
Well, and I think even more importantly for the federal transition job, which I don't know, I heard you guys talking about before. I don't know if you mentioned that the lefties completely take the federal transition job out of context and seem to see it as a permanent way of employing a large swath of the population as opposed to temporarily catching them to get them back into the private sector. So if we take, let's take a village economy or a small town economy, and we have Warren Mosler's business cards as our money, and we say, okay, we've got 50 people here who need to be employed, and due to the foreign deficit, we only have 40 cards. And so now we have 10 people who are unemployed. Well, because we have the federal transition job, those 10 people could go get jobs, and the money that they're paid isn't in the system. It's getting created from the money creator. And then once they have 10 more business cards get introduced into the system, the private sector now has enough money to afford to buy them back out, because, and then putting it back more into real terms, let's say that the wage that they pay is $15 an hour at the federal transition job, which would effectively create a minimum wage without a minimum wage law. And then that $15 an hour generates day after day after day and gets put into the local economy. And then the local business owner finally says, hey, I got enough patrons here that I can afford to pay you $17 an hour to get you out of that. And then what that does, this is the automatic stabilizer, is that stops the money creation. That was what was happening while he had that job.
Right. Okay.
Does that make sense?
Yeah. So you're trying to put in unattended fuses or self-adjusting kind of stuff that's not individual choices.
It's not magical. Basically, it's rather you're removing limitations that were imposed on the private sector by government decree. That's how I would look at it.
Everyone, please like, comment, and subscribe to help us grow this channel. I think we cover a lot of good stuff. We're covering ideas that you're not hearing anywhere else. Economic ideas, historical ideas, systematic politics ideas you're not hearing anywhere else.